Hi and welcome to this video brought to you by 𝖢𝖥𝖣yi. My name is John, Senior Market Analyst. In this video, I'm going to teach you how to use the Fibonacci Retracement Tool. The Fibonacci Retracement Tool measures the primary phase of a trend. It then identifies potential levels of support and resistance depending on trend direction. For instance, if we apply the Fibonacci Retracement Tool to this swing low and this swing high, you can see it produces levels known as the Fibonacci retracement levels. There's only three levels that you really need to focus on. That is the 61.8, 38.2 and 50% retracement. Now the 50% retracement is not technically a Fibonacci retracement tool level. It was developed more for stock traders, but can be helpful when looking at trend direction. Essentially, if you measure from the swing low to the swing high, the 61.8 should be the first level that price comes into contact on a retracement. If price reacts at this level and starts to again move higher in line with the upward trend, it means that this is a strong trend because the market has retraced only slightly, which means that the underlying trend is very, very strong. If, however, price retraces back to the 38.2 and rallies, it does mean that this could be a trend that is nearing an end. Now, please remember that the Fibonacci Retracement Tool is just a tool and that it should be used in conjunction with other analysis and confluences. Please use appropriate risk management when using indicators and other tools. And let me know, do you trade with the Fibonacci Retracement Tool?